Alrighty, so this is just going to be a quick little market scan, market update going forward on the opportunities that I envision, commons-wise, shares-wise, well, those are the same thing, leverage-wise, and just a broader contextual thesis behind the equity market and the movements that are expected to happen, in my opinion, right? So, first, if we just want to get a basis in terms of SPY, right? I do think that the short is still in play on a higher time frame basis. However, as I've said, this Q4 into early Q1 window, we have those flows, right? We have the single stock expiration being relatively important and large in January, and then the subsequent index expiration coming up in a couple days, right? And these mean, and especially within the holiday period, right, as well as the summer, we have very little participation from a lot of regular traders, and we have those flows becoming more relevant and powerful, I guess would be the correct word, more meaningful in terms of the movements of the equity market. Now, that's not to say that we're not building out a distributive sequence, but if you go back to Q4 last year, post-election, right, we start to see the distribution build out following this exhaustion, following the sweep of this gap and the continued breakout into the December expiration and Fed meeting. 3% first initial footprint on a 3% decline on the 18th of December. We absorb all the supply within this gap. We see the highs be exhausted and the dominoes start to fall on the deep seek sequence, and then the February expiration is literally the top that sparks the decline, right? This supply or this demand is all wiped from this election gap. You see the three lower accumulation in there, and then we see the lower high, kind of the support turn resistance in March, and then the massive decline that is then sparks this rally over the summer, and then the Q4 where we have those flows playing a lot of being very relevant during that time period, right? So I think this is something similar, right? Like I said, you had the three lower accumulation within this range, right? And there was a reason that this was, pretty longable into the new year, right? And then we have the February of expiration that kind of sparked the entire broader equity market top. And we had the dominoes start to fall prior to that in terms of the deep seek gap on NVIDIA being like a 17% session decline on the 27th of January, right? So when you look at this chart, and I kind of have it labeled just a little bit, right? We see, our initial kind of decline in late July into August. This is like a 4%, 3.3% decline into the August flows that sparks a nice pop to new highs. And then we see the rally into this October 10th, 3% candle, where this is kind of our, secondary high that sold off, and another nice little leg from the sellers that is shown. That shows that there's, at least some supply in this range. However, we absorb the supply within this candle, right? We digest this move, we see the rally, but then we see this, pretty notable exhaustion in terms of the daily candle structure here, right? Gap ups, the volume is, increasing, but the effort's increasing, but the result is staying relatively the same or decreasing. And then we get our decline starting with like an internal bear flag into some gap fills, and this in-wall gap fills from the week of the 27th. And then here as well into a gap up that traps a lot of early longs, right? This was a very accumulative range, and a lot of early longs would have been trapped here, undercutting this candle where there's a lot of volume and relevance and intent behind this print. And that's kind of our initial like low taken out, right? So we take out those lows, and we have a lot of hands that change underneath such a notable footprint that then sparked, off the lows of this candle, we get a 5.72% rally. We see the rally subsequently happen following that, right? And then we have our kind of daily exhaustion that's being put in here, right? It doesn't necessarily look the best per se in terms of like how this daily range looked. Like if you were to long this, you would have to be really cautious, and in my opinion, waiting for what I think now is developing as our higher low would have been the most phenomenal opportunity, right? So we see the gap failure, we see the decline happen relatively quickly, and we see kind of a capitulation print yesterday that was put in, right? And now we're getting a nice CPI gap up. So this is, reclaiming kind of a pivotal point within this chart in terms of the October 10th print. and then like this gap fill from, just really, really important ranges in terms of this 6,700 um, to 6,750 range kind of. But we find what I think is going to be our higher low, a little bit shallow in terms of discount. After the rally that was sparked following the sweep of the October 10th low, 6%. And I think this is just going to continue to build out a distribution. I think that we probably most likely will get a pop to new all-time highs, and that'll be subsequently sold off. Right now, this could happen, like this. We get the pop, we get a decline, and then we get a lower high into January or February. Or we could fail this. We could take out these lows again, get the pop, and then see a decline start in February. But I think that this is just not necessarily a vulnerability options wise. I think there's a lot of common trades that you can take, and then there's some potential options opportunities within the broader equity market that are viable in a little bit of time in terms of your expiration. But for the moment in time and the time being, I wouldn't necessarily touch this. I would just kind of let this develop, right? We can have our preliminary supply, we can have our buy climax, our UT, our sign of weakness, our reaction, our um, kind of test right here, and potentially put in our UTAD into an LPSY. I would look for probably something like UTAD decline. Oh, what the fuck? UTAD decline, lower high, stemming off of like another. Like if we can get a third lower low here, right, and that kind of give you a volume divergence, and then we put in like our sign of weakness here, and I mean ideally decline to sub 6,000. Mid next year before the summer, and then it's going to kind of be what happens next, right? But that's just kind of my thought process going forward, right? We see the stall, we see the weekly chart, not necessarily give you the cleanest look, but understand the time frame and windows that you can really, really execute on are very selective in terms of a short-term trade or short side trade. And it's very similar on QQQ, right? We see the potential UT, we see the decline, we see the cumulative sequence build out here. This candle's low gets swept, we reclaim 589, we rally, we fill this gap. Gap low, and we're finding what, in my opinion, is going to be kind of our higher low that's being established with a nice little capitulation print yesterday's session, and our higher low, and this is a little bit better in terms of discount in the data sets, right? And so this should give you a nice push to 632. Yeah, you could trade this. 610 is a very pivotal spot. This was the range where we kind of initially saw our decline stem from, and we lost this on the November 20th candle. Undercut this low, undercut these lows, saw the capitulation, saw the climax, saw the rally, saw the exhaustion, and now we're seeing a potential higher low. So this is definitely a good look on QQQ if you really want to long this. But I have a couple other names that give me a much better clean opportunity in terms of a short personally. But this is a really, really nice looking chart right now, right? When we have the undercut, the rally, and then we're finding our higher low on a fake out underneath, right? We held it this candle Tuesday session. Wednesday session, we undercut this on like a capitulation candle. And then we get the gap up, open right on top of this in-log, right? And we see the subsequent reclaim being established, right? So 610 is a very pivotal spot. If you wanted to take a short or a long, short-term long up to 632 off of 610, maybe some January expiration, that would be completely viable. It's just waiting for that, right? It's a very pivotal spot. Like I said, a potential path of least resistance. And we rally above this, and now we're reclaiming it. 632 is very viable here, right? I really like QQQ longs over SPY if we're really, really going to get into the depths of it, right? SMH filling a gap that we established on the 26th, very, very similar look. I still do think that this is a distribution on XLE. It's just something that's going to take a lot of, or XLF, it's going to take a lot of time. When I think about energy, I've said it before and I've said it again. I think this is going to be a generational long opportunity, but it becomes much more appealing and much more vulnerable if we take out the April lows once more. Obviously, from right now, that's a 16% decline, probably 18 to 20 into this October 2022 in-log. But this is a much more vulnerable chart with a much better opportunity if we fail this gap and we see the subsequent late longs get trapped and undercut these lows to see a change of hands and a nice continuation in terms of just the cause that would have been built out through that. So I like energy. I don't mind taking stabs on long-term commons positions via Oxy. I think this is one of the best charts in the market in terms of taking a position not only to 50 plus, but up to potentially $80 in the next coming year or years. I would prefer for this to get taken out. I don't mind taking a common starter position with a long-term perspective in mind. I don't necessarily justify a lot of the short-term exposure that you could have on energy. I think the Oxy is really, really nice, and I think that this kind of failure in the Buffett news as well is very, very vulnerable. You have a lot of light longs, like I said, getting kind of wiped there. And we see the cumulative sequence building out on a day-to-day perspective. Nothing necessarily super, super clean that I'm super, super keen on quite yet, right? And we have like USO, right? Um, I don't know. I like these on a higher time frame perspective. I just would like them a little bit more if they were a little bit cleaner. And I think that just want to be one of those names where, in one of those sectors where you can take a couple stabs and be okay with losing on those because the risk to reward is so vulnerable. Meta, besides like QQQ short-term commons, is probably my favorite long in the market right now, and on a Mag 7 perspective. So we essentially have an $80 to $800 rally in 3 years, for starters. And we have the preliminary signs of a distribution beginning in mid to late 2024. And our UT kind of put in 2025 February top, which sparked a 35% decline. Right, we kind of have our preliminary signs throughout here. Our UT, our UTAD, right, when we get this rally, we get the earnings gap showing you a lot of exhaustion. And the subsequent LPSY failing this gap that we had put in on the 18th of August. Decline, LPSY, decline, fill the May 12th gap. And then ideally what we're going to do here, right, this is a phantom print, right? So this 710 print is a phantom print. It's also our 618, right? It's also our progression gap fill from the August or July report. And it's also potentially going to be our sign of weakness, right? So I really do like this chart, and I really do like it on longs, on literally just METU, 2x leverage meta comments, right? You can take it with a very objective risk, around a 590 to 600 average, and you can cover on, what is a 26% gain on METU, a little bit of that position, and then you can keep it to 650 or 695 to 710 for a 30 to 40% return on commons, right? And then what I would like to do within this range is to start looking for shorts, right? I think this will decline a little bit more. And I think this is one of the best charts in the entire market, right? When we have our UT, right? We have our automatic reaction. We have our UTAD, right? We go here to the daily chart, right? We have our LPSY. We have another LPSY. We have our potential minor sign of weakness underneath the previous support that sparked an LPSY. And all of this is stemming after preliminary signs and climaxes being put in throughout the entirety of 2024, following what was already, 500% rally ended up being an 800% rally. So I think that this is a really good long-term short side focus. I think this is also a good short-term short side focus. You can take options. You can take options within this gap fill this week, right? And like 2026 expiration targeting 695 to 710. I do think this phantom print gets hit. I think it's there for a reason, and I mean that's my meta outlook. This is a beautiful chart that I think a lot of people are kind of underrating. Nvidia, this is a distribution. This is a progression gap failure from the earnings report we had in November. However, I don't really see a really crystal clear opportunity to execute on this quite yet. Just not my cup of tea. I don't think that the short's going to be super vulnerable. I think that this is going to be something similar to back in January, where we had a really, really clean read on the character flip within this name. I think that this is going to take a little bit more time. Tesla distribution, very evident. We had a nice decline yesterday off the all-time high failure where we had a lot of volume and liquidity built up at the 488.54 spot. Very distributive look, personally, but I don't really have quite a read here on Tesla and AMD. Pretty similar. Apple pretty similar. I do think that this is probably putting in my opinion, a UTAD on a weekly distribution, but we'll have to see, right? And it's a lot of these names, right? We have a Microsoft previous all-time high reclaim, which honestly should put in like a lower high to be shortable, but you can definitely long this similar to like what's a Microsoft 2x leverage, like MSFU. We can long it off this 470 spot, 7 to 10%. Right? I think this is a pretty nice looking chart personally, in terms of like a commons trade, but yeah, nothing crazy, nothing like Meta where it's giving you a 40% return on 2x leverage, a little bit of a lower beta name, right? Disney has been super nice. I don't justify getting aggressive on this. I mean, you can. This is a really, really nice looking accumulation that's been built out for a couple years now off the COVID lows. It sparked a subsequent aggressive rally, and we have the August lows being taken out in April, the very easy melt up, and then the reaccumulation happening. This is a commons trade off of like the $100 spot. Right? This is a really easy $100 to $130 commons trade where you can start taking your position at this like 102 range, and then ideally though, you see a move down to $100. We're seeing the earnings candle give you a nice influx of volume. The subsequent kind of capitulation that happens, the reclaim. This is a really nice like 4-day inside bar sequence, reclaiming this candle's low, a nice pop, subsequent inside bar, a rally, potential higher low off of the earnings candle open. But I would love for this to fail the gap or fail somewhere within this gap and undercut like the $100 range and this earnings candle low. And I think that'll give you a really, really notably clean LPSY on this name. And we'll give you the rally to 130, right? And that's a very big comments focus of mine on a lower risk, lower beta name that has a lot of potential. There's definitely an options trade that's set up via, like I said, this 4-day inside bar pattern. But that would just, in my opinion, be a common or an options trade from 105 to 109 with a little bit of room left. Cover some on this candle. But I like this chart a lot. I like Ford a lot. This chart's been beautiful on commons and options, and I think this goes to 15, potentially even higher. Discussed this a lot. We saw a really nice pop last week. We saw this earnings candle, this earnings candle high taken out. This is beautiful, man. I mean, there's a commons opportunity here. Cover, re-roll, cover, re-roll, cover, re-roll, and you can take the options trade within this very nice compression to that $14 spot, right? I've talked about this a lot, just the accumulation underneath this floor that was established in 2023, which was undercut in 2024. Consolidate here in this general range, see kind of our test, and then our spring and our subsequent change of character. This is a beautiful one, man. Nike, we have an earnings report after hours today. This is looking very, very nice in my opinion. For a common trade to 90, got a little bit more of a speculative position. But really, really nice volume building up down here starting in 2024 underneath the COVID lows, right? So paying attention to that. Earnings report. Snap hasn't been moving that well. That's why I said commons trade, right, man? We got a lot of volume being put in down here. We have our low in April being undercut prior to the report, or prior to this influx of volume, right? So when you see these lows being taken out that we put in April, and the exhaustion and the volume anomaly and the small spread print, right, giving you a clear sign, and the wicks being established that there is a buyer underneath this low, and then we have the subsequent historic volume climax or pop being established after that on like a 30% move. That's a very good sign that there's a very interested aggressive party underneath this candle's low. So we see that. We see the subsequent consolidation, the pop, the stall off the report. And now we're seeing, in my opinion, those lows taken out, and still a good looking commons trade, right? Where you can trade it from this $7 range to this $9.40 spot, right? Where we have a gap fill from an earnings report in August. But that's all I would do for now, unless you're taking like a long-term position on Snap. I'd want a more crystal clear change in character. I like to reference the lift chart here because it's a bottom feeding growth name that broke down 90+% from its, or 90-ish% from its all-time highs in 2021, and highs in 2021. And there's plenty of opportunities that give you climaxes and influxes of volume and shorter-term commons and options trade. But before you really want to get aggressive to target like a breakout of the accumulation, of the weekly accumulation, I might add, the cause will have a subsequent effect, and the timing will be relative to that cause and how long it's been built out. You want to wait for the character change, and that's what happened in July and August here on Lyft, and then you get the 80% rally. So you want to wait for the character change to kind of be put in my opinion, right? And path as well. I mean, this is a beautiful chart. We see the climax Preliminary supply, we see our floor established. We see it undercut in August. We see it fail this gap. We see a new all-time low breakdown in April and March. And then we see the subsequent initial change of character, reclaiming the previous support established in 2022. The aggressive rally and highest volume ever on an 80% pop. LPSY, another breakout, LPSY, or LPS, right? Last point of support. This is a beautiful chart, right? We see a very notable opportunity with a very clear risk here, right? And we see an opportunity to cover, roll, right? We're getting another harmonic volume pattern following this 20% pop on the earnings report, the breakout above these highs, the stall, and then the nice low volume consolidation undercutting this earnings candle open and this golden pocket. I think that $20 is pretty vulnerable, and I think after that, it's going to be one of those names. Let's see how it acts following that, right? Because this could push 30. But you have to be pretty patient with a name that's a little speculative, right? Intel, this still looks okay. I mean, the real trade was 25 to 40, but there's definitely still an opportunity within this for some commons exposure to maybe like the $50 gap fill that we have here from 2024. AVGO is a pretty nice distribution if you want to study this. Earnings gap exhaustion, 3 higher high, 4 higher high distribution that sparked a 23% decline into the report or off of the report and following it. A pretty nice distribution that's been building out. What else? Target. I mean, this is a clean look, but it's not my favorite. There's no clear objective risk quite yet, in my opinion, on some of these names that I have, but they may be a little bit better going forward. Lulu has been really nice, but I didn't like this too much. I think this was a great commons trade to 200 to 220, following the influx of volume off of the report and the subsequent exhaustion. Just never like undercut and gave you a higher low or anything, right? We had like this low, another low, and then we never really undercut those lows and gave a crystal clear kind of change of hand. So something I didn't really focus on much. UPS was a pretty nice like 10, 15, 20% commons trade from 90 to 100, potentially 110, but a little speculative, a little bit of a low mover. And I don't know, like these names look good, but no clear, like Adobe looks pretty nice in terms of the potential to 440, right? Like I really do like this name. Just hasn't given you like the clearest look, I guess you could say. Same with the CRM, like 3 lower lows underneath the August 5th candle, right? April, August, and then recently in November. Commons trade to 300, yeah. You could take like a 230, 240 average and take this 30%, but I think there's a little bit of a better opportunity elsewhere, right? I mean that's pretty much, in all honesty, it, right? I think that, like I said, I think there's a generational short coming soon, a generational oil long coming soon, but it's going to take time, it's going to take patience, and it may or may not take a couple stabs before it really pans out. Like I said, there's a QQQ long setting up off 610. There's a lot of commons longs, and there's a lot of patience that needs to be had. So good luck, have fun.